Hey everyone, Michael here. Some big news coming out of the market today. The Nasdaq, for the first time since the 2008 financial crisis, is about to hit the 200 weekly moving average. What does this mean? Let's talk about it. Now, we have been blessed that the SPY and the Nasdaq and the Dow have all been following some very basic technicals here. Such for the Nasdaq here, we had a death cross, and what happened right after that death cross in the weekly charts? We crashed back down. That's exactly what you guys want to see. The unfortunate thing here now, which could really spark a lot of talks about recession, is currently the Nasdaq is coming very close to this 200 weekly moving average. So what happens when we come into contact with it? Now here we have the Nasdaq's monthly chart with the 200 weekly moving average running through it. You notice the last two times what happened when we actually broke down below this level? Major crashes, dot-com bubble crash, 2008 financial crisis crash. Okay, but here's the important thing that will help you guys make some money. If we zoom in a little bit on both of these last little tops and crashes, what happened? We bounced up first for a couple months and then we proceeded to crash. Here, we bounced up for a few months and then proceeded to crash. As long as we follow the same course in history, we have an opportunity to have a bounce for at least a few weeks here before ultimately breaking back down below the Nasdaq to have a big flush out of all the major markets, and then we're most likely going to have a reset that brings us back into a bull market where we can hopefully expect all the good things where Bitcoin goes to all-time highs, the Nasdaq and the markets will continue up running. But right now, guys, look at this. We're only a few percent away, and if we go over to the daily chart and use the 200 weekly moving average, and let's measure this out, everybody, look at what we have to work with. We're less than 3% away from the 200 weekly moving average. So that means one more bad day, maybe two more bad days, and we could have a good green week next week, leading us for some good returns in all of the markets, crypto, stock markets, forex markets included, okay? So take your time. Watch this very closely. The one thing we do not want to have happen here is we do not want to have a moment where we come back down to this 200 weekly moving average and break down before. If we do not bounce, if we continue to break down, that will lead to a major flush out happening very quickly. And guess what? You know who knows all this information as well? The people on Wall Street. So everybody on Wall Street is going to be placing similar bets for a bounce here. If for some reason this does not work out, everybody is going to be flushed out, and that includes a lot of the hedge funds out there who are betting on some type of short-term bounce before eventually, most likely, we do break down below that level of support, leading to a major recession where people are going to be freaking out like we haven't seen since the 2008 financial crisis, okay? This is going to be a different type of recession. We're not going to have a financial crisis on top of it, but you will see lots of stocks and cryptos go away for a long time unless they have a practical use where they can be making money and making partnerships with corporations who are willing to give them lots of money so they can get a return on their investment themselves. Be careful, guys. We're looking for a bounce, but that's most likely going to be one large multi-week fake out before eventually we do look to break back down. You will see lots of crypto people out there saying this is the official bottom, but chances are, like history says, after we have that little bit of a bounce, after we have that bounce, guys, we're looking for a very rough time in the markets, similar to what we've seen again in the dot-com bubble and the 2008 financial crisis. Subscribe.